Hi everyone, let's cover my Elliott wave scenarios on Bitcoin on the 8-hour and 1-hour time frame, starting with what you see here on my chart, which is the most bullish scenario, being a triple zigzag, W, X, Y, X, Z. After a triple zigzag, you expect price to move to the upside and take out the all-time high. However, it has to be said that a triple zigzag is a very rare structure, never really preferred unless all of the other scenarios start to fail. Nonetheless, for the bulls, that is your invalidation, 74.4k. Nice little detail being that the low is made at 420. And then you have a wave 1, 2, and you look for a wave 3 towards the upside. Second scenario goes into the other direction, which is a diagonal, 1, 2, 3, 4, 5. But short term, you actually expect the same movement in price. But instead of counting a wave 1, 2 and continuation up, you preferably here also look for a bit of a retracement to the downside. But then of course the next leg up, instead of being impulsive, right, and looking for a wave 3, here, you're looking for a corrective move to the upside, giving the opportunity for price to get a second leg down to take out the low of your wave 3. The third scenario is a finished diagonal here in a wave A, and then you also look for price to move towards the upside. However, that move to the upside is then counted as a wave B, which basically means it has to be a corrective structure to the upside. Now, in that case, you preferably count a wave A, B, C towards the upside. And at the moment, it is a bit unlikely that a zigzag to the upside is going to finish behind the 0.382 fib time taken from the start to the end of wave A. And preferably, your wave B ends at least after the 0.382. So that is why on my chart, I put a WXY to extend a corrective structure in time, creating a double zigzag to the upside. After wave B, you still look for a wave C to the downside to take out the low at 74k. And then finally, we have a double zigzag to the downside. And you pretty much get the story, I suppose, of the local price action, which basically decides the probabilities on the 8-hour time frame. So here we have zigzag in a wave W, flat in wave X, and then a zigzag in a wave Y. Preferably, you do not touch this level here, the 0.7 Fibonacci taken from the start to the end of W at 98.9k, because it will significantly decrease the probabilities for this scenario. However, you do preferably take out this high of wave A at 95.1k, which generally is a minimum target for a flat ABC, unless it is a running flat ABC that doesn't take the high of A, but that is the rarest flat structure. So on the 8-hour time frame, all of the scenarios preferably still look for a retracement with or without taking that high one more time. But if we then jump to the 1-hour time frame, then we could count a zigzag or potentially an impulsive structure to the downside, as long as at least price doesn't take out this high at 85.5k. And that has to do with time. If you take a fib time from the start to the end of your wave A or wave 1, and you toggle on the 4 and the 5 fib time, then you can see that now price is ranging behind the 4 fib time, getting close to a 5 fib time, which in other words means that if price would move towards the upside and take out that high, the probabilities are very low that this structure is related to this move to the downside. In other words, counting this as an A, B, C or a 1, 2, 3 lowers in probabilities. And then it opens the door to more sideways corrective structures that have a more shallow retracement compared to the move towards the upside, as you would expect a more sideways movement instead of potentially a deep movement. Now, in that case, we then have to consider a WXY sideways structure or a flat. In that case, this move to the downside is counted as a wave C of an ABC flat structure, which is then your wave W or your wave A. And then you look for a wave X and a wave Y, or A, B, and then a wave C, which very much depends on how price would react if it eventually takes out that high. Just above that high, we do have here a point of control at 85.7, so a little bit of resistance. But as long as you stay below the 0.9, a WXY would then still have higher probabilities than a flat. The 0.9 is a minimum target for a flat wave B, and the moment you hit the 0.9, you start to increase probabilities for a flat structure. But the most common flat is an expanded flat, and the wave B target for an expanded flat is over here, 87.2, 87.7K. And then you look for a wave C to the downside, which could be very volatile, very sharp, and of course quite deep as well. But initially, this would look like a sideways corrective structure. Finally, if you do take out that high, we do have to consider, again, the potential of a double zigzag WXY towards the upside. So ABC, WX, and then a longer sideways structure B, and then eventually you get a wave C to the upside to finish your wave Y. Common target area on the chart, 87.5, 89.7 in confluence with the 88.8K highs as well. We do have to keep an eye on time, however. If you take a fib time from the start to the end of W to the end of wave X, and we toggle on a couple of more fib times, then you can see we are now approaching the 3 fib time, which starts to be a little long for a wave Y, but only the probabilities really start to decrease if you're going to get to that 4, right? So that's something to keep in mind. The 4 fib time is Monday, 2 a.m. Central European time. Now, just to show you a couple of examples of shallow retracements, I prepared some Fibonacci's on my chart of historic price action. Now, this does not happen very frequently, so I got you 2 examples, and the first one was on the 2nd of February 2024, and here you can see we created a low. This was quite a clear impulsive structure to the upside, as you can see, right? You have a wave 1, 2, 1, 2, 3, 4, 5, 4, 5, and then we started ranging sideways. We actually never touched the 0.382. We just missed out on touching the 0.382 before eventually continuing towards the upside. So that is an example of a very shallow corrective structure. And another one that I remember is over here, which is the 18th here of June 2023. So on the lower time frames, you can count an impulse here towards the upside, a 5-wave structure. I'm on the 8-hour now, so can't see the detail. But you can count a 5-wave move, and then you can see an incredibly shallow range, only touching the 0.236. So the moment price, more locally, would take out that high, right? Then we at least have to consider the potential of a more sideways corrective structure, right? The WXY or possibly the flat, keeping in mind that just below the range, we still have this 82.675 daily naked point of control, which might as well, especially in a more sideways corrective structure, provide the support necessary to eventually continue towards the upside. But then again, on the 8-hour time frame, the scenarios and probabilities depend on the retracement that we get towards the downside, or at least the range that is forming over here. So if we then look at the probabilities, then at the moment we are keeping an eye on a retracement as the highest probability / a continuation of this range. Also, the New York Stock Exchange and other markets, or many markets at least, are closed today because of Easter, not on Monday. Actually, don't know why I wrote that over here. So today is closed. And the weekend is coming up as well. So the fact that many of the markets are closed increases the probabilities and the chance to range and not have any significant breakouts, right? And with breakouts, I actually mainly talk about a big continuation up, right? Talking about a range is mainly staying inside this structure over here, right? Looking for a range, no problem to have a bit of a retracement, but not looking for significant breakouts to the upside at the moment. Also based on an Elliott wave point of view, as pretty much covered, but also because most of the markets are closed because of Easter as well. Now, as long as 85.5K isn't taken, there's a potential for zigzags or impulses to the downside. If price would take the high at 85.5, probabilities increase for a sideways WXY or ABC flat, with the potential at least for an unfinished WXY. Now, I hope that you are going to have a great Easter, eat lots of chocolate, and spend some time with friends and family. Have a great weekend as well. And then I'll probably see you at the next live stream or, of course, the next video. So thanks for watching this video. Hopefully you found it helpful or valuable. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.